Welcome to It's the Economy. Home sales for the top 7 cities hit a peak growth of 31% in 2023 over year-ago levels. That's as per ANAROCK. Bengaluru saw the highest rise in sales and highest fall in inventories as well. Price rise also is higher in that city. Several real estate stocks like Brigade, Prestige, clearly from Bengaluru, and even Macrotech have doubled over the past 1 year. The only sore point has been that affordable housing did very badly, and sales in this segment fell versus the pre-COVID year of 2018 by a huge 26%. Now, what does 2024 hold for us? We have a panel of experts, Anuj Puri of ANAROCK, Gulam Zia, Senior Executive Director at Knight Frank, and Deepan Mehta, Director at Elixir Equities. Gentlemen, good morning. Thank you very much for joining us, and a very happy New Year to all of you. Let me start with you, Anuj. Your assessment. It's your report. I'm quoting 31% higher for the top 7 cities. What's the overall India tally and your initial outlook for this in 2024?
First of all, a very good morning and a happy New Year, Lata, to you and your viewers. I'm delighted that on 2nd January at 10 a.m., you've got a real estate slot for all of us. It does mean is that this sector is becoming more and more meaningful, because if you can come on Lata's show on the 2nd of January at 10 a.m., it is pretty meaningful. 2023 has been a great year. It was like the sun, moon, stars, and earth were fully aligned. You had 31% growth in the demand, which is the sales. You had 25% growth in the supply across India. NCR was a little bit of a lag on the supply, but the overall inventory fell down, unsold inventory by 5%. And the best thing was that the prices were largely range bound between 8 to 12%. Clearly looks very, very promising 2023. As we go into 2024, if Lata, the economy continues to chug along the way it is, and the inflation and interest rates remain slow, I do feel is that 2024 may even outpace what we have performed in 2023, because we're not seeing any letdown in the demand, as we are stepping into 2024.
Okay. Oh, that's very good to hear. Thank you for the very kind words, Anuj. Real estate is, in a sense, the motor of the economy in terms of the jobs it generates and in terms of the reflection of prosperity and confidence in the country, and hence the choice of real estate for an economy show. Gulam, your first thoughts on the office space segment as well. How did it do in 23? And from what I read from both your reports is that GCCs have contributed to a significant amount of demand. But sum up 23 and first thoughts on 24.
Well, to me, what's most promising about 2023 was that this year we were inching closer to what we have done the historical best before the COVID hit us. And that's very encouraging, because during last 2-3 years, because of work from home and all kind of jargons thrown at us, office space was under a pressure. Now, that has changed. And as I said, 23 closure would be very close to what we did the historic best. And as you said, GCCs, yes, not just GCCs, but even inbound. Earlier, we used to talk about outsourcing. Now it is insourcing. Most of the banks, financial institutions, etc., are looking at the global capability centers, captive centers in India, which is taking it notches higher than what we were earlier, say 20 years or 10 years back, when we're talking about back offices. But in last couple of years, a decade or two, the capabilities, Indian competencies have increased. And now we are talking about absolute research-related top-end jobs in India, which means even the quality of offices required, spaces required, space per person required is all shooting up. So, as I said, the closure of 2023 was very encouraging, almost touching the peaks that we have seen historically. And 24 promises even better. So, taking it up from what Anuj said, not just residential, but even office market is going to perhaps break the records in the coming year.
Okay, you're saying both residential and office is likely to do better in 24 than 23. Is that right, Gulam? Yeah.
Indeed.
Anuj, Anuj, you'd agree?
I do want to add is I think Ghulam explained it beautifully. I just want to add this phrase is that it was absolutely a pleasant surprise, Lata. I did not expect, honestly, the offices to do so well, as Ghulam has enumerated. I mean, if you look at West, Lata, if you look at the US or largely Europe, office is a bad word. And
Absolutely.
in India, we're seeing is that we are going to be almost reaching the previous high of 2019. So I mean, it's like phenomenal what the economy is doing and what this insourcing and global capability centers has been able to do. That the rest of the world is reeling under vacancies. And we're going to see over the next 12, 18 months a lot of the offices being handed over back to the banks in the US. And here in India, we're going to come to the previous peak high of
Now,
2019.
oh, absolutely. Commercial real estate is a bad word in the US and could be the Lehman moment. I mean, not to scare, but that clearly is something which is an overhang on banks. But Deepan, is all this good news in the price? Look at that. Prestige Estate has risen 154% from year-ago levels. Brigade Enterprises has risen 92%, Macrotech 90%, Colte Patil 88%, all from exactly 1 year ago levels. Is it all captured, Deepan, or would you still buy real estate stocks?
Good morning, Lata, and thank you for having me on your show, and Happy New Year as well. Well, the real estate index, NSE, is up 80% last year. So one would have to say that part of the optimism has got priced in. And if you compare in terms of valuation, traditional valuation matrices like price to book, price to earnings ratio, then these are all at rich valuations. But the thing is that the real estate companies are keeping on adding land bank or joint development projects, and the prices are remaining firm. And most importantly, on the premium side, they're getting very good, I would say, profit margins over there. So while the momentum will continue, you cannot expect similar type of returns from real estate stocks in 2024. And some amount of, I would say, slowdown, or I would say mild cooling off of the kind of volumes which these companies have been selling. Also, one should consider, because the base effect also has moved up in the last year or so. So putting all of this together, I do feel that we may have a year in which real estate stocks more or less perform in line with the indices and not have the same kind of outperformance which we saw in 2023.
As we speak, Deepan, we are flashing the valuations. And as you point out, Godrej is at 5.2 times price to book. And even Prestige and DLF at over 4 times price to book. So are there any preferences for you here? Sobha is still 3.4.
Yeah, that's right. I think the way to approach real estate stock from an investor's perspective is to go for, it depends on your risk appetite, of course. And if you want to play it safe, then there's, of course, Godrej Properties and DLF. But our pick would be Sobha Developers from a valuation perspective, and some of the smaller new listings as well one could consider, because there's that valuation gap which they can cover. At the same time, I think the industry is doing so well, so a lot of the smaller developers also will benefit from an upswing in prices and increased demand as well. But the likes of Macrotech or DLF, Oberoi Realty, I think they are quite well priced, if you ask me, at these levels, and you cannot expect a significant outperformance.
Okay. Anuj, what about price rise? Is it, I mean, you pointed out that I think it's about 5% last year. Is it likely to maintain reasonable? And is there a city-wise red flag or even a green flag? Some cities being more affordable than others or more lucrative than others for those who want to buy and sell?
So, I'm glad, Lata, with the rally, the way it is taking place, the developers have been pretty good. In the past sort of 3 or 4 cycles over the last 25 years, I haven't seen them being so disciplined. This time, whilst the sales have been very good, they've been very careful of not increasing the prices. They're wanting, sales momentum to continue to increase, cash to come in, their debt, to come down. So clearly, I think that they will be very, very careful in not increasing the prices. My guess is that what they will pass on to the consumer will be whatever the cost of construction or the land cost increase is to the consumer. But they're not necessarily going to push for better margins. That's what my thought is. So my guess is that it'll pretty much remain sort of bound between 8 to 12% even in 2024.
Okay, that's good to hear. for the prospective buyers as well, and maybe not for those who want to cash out. Gulam, you know, your global Knight Frank report indicated that the Indian HNIs are thronging to Dubai. Largest number of $10 million homes in Dubai this year bought by Indians. It's become a magnet for wealthy. Also because if you buy large properties, the chances of getting a kind of a green card over there is becoming a possibility. Do you think that will take away the sheen from the premium market in India because of this alternative magnet? Or does premium continue the brilliant run it has seen this year?
Well, I would want to say these two markets are mutually exclusive. You know, the people who are going abroad and buying have a different set of requirements and priorities. And the market that you're talking about, as far as Indian upper end and luxury, uber luxury market is concerned, the demand is more inward looking. The buyers who are buying it have the pent up demand was there for last so many years. After a long time, this segment is showing signs of improvement. The 23 was a great year for luxury housing. What you're talking about in Dubai, actually, in last year or year and a half, we are watching slight deceleration or reduction of volumes from Indians buying in Dubai because a lot of those changes in taxation norms, etc., that our repatriation is becoming difficult. So I would want to believe that Indian markets will benefit from whatever is happening. And we would continue to see a bull run in the market here in India in the upper end of the market.
Okay, yeah, I mean, everywhere where, you know, it's Titan doing better than Tata Consumer. Wherever you see discretionaries and expensive ones, premiums are doing better than staples, and that's reflected here. Very quickly, Deepan, you know, stock market wealth creation normally reflects in greater demand for real estate. Not happening this time.
No, Lata, I would disagree. In my circle of investors and stockbrokers, many have moved into their new houses, especially. So there's clearly the wealth effect.
Moving into their own new house is a good sign. But, you know, rushing to become investors, that sign doesn't seem to be there. Is it? I mean, that's the sign of froth, I think, in previous terms, I was told.
No, there's a sea change in real estate industry in the last 5 to 10 years or so. And investing in flats or offices is no longer a fad. I think we are seeing great amount of financialization of savings. And investors prefer to buy real estate in investment trusts or real estate stocks rather than investing in actual real estate. So from that point of view, I think it's much better from the industry fundamentals.
Oh, that's good to hear. Thank you very much, Deepan. Out of time, but an interesting chat with you, Gulam and Anuj. Thank you very much indeed. I think that's a very important sign that the stock market froth, if any, is not becoming a real estate froth. That's positive for those of us who want to buy houses in 2024. Thank you very much for joining us on this special chat on Bazaar. Break. Chartbusters up next.